Hello friends, what's up? Let's start the topic how to pass the journal entry. It's a very important as well as very interesting topic. Why it is important? Because the whole foundation of the account is based on this topic. So in order to have the mastery over the accounts, you need to understand this topic. Like in mathematics, you need to understand what is addition, what is subtraction, what is multiplication. So the same importance which the addition, subtraction have in mathematics will have the same impact of this chapter in the account. So let's start the topic how to pass the journal entry. So in order to start this topic, I need to give you one small example. Suppose there is one person whose name is Mr. Mukesh, and he start the company and he named the company as a Reliance Limited. Now, as per the business entity concept, as you all know, owner and the business are the two different entities. So whenever you are making an account, you need to understand first for which entity you are making an account. Either you can make an account of Mr. Mukesh or you can make an account for the company Reliance Limited. So the first method of doing and how to pass the journal entry will be, first you need to identify for which you are making an account. You are making an account for Reliance or the Mukesh. In accounts, 99% of the problem which you will get will be from the business point of view. Now, I'm giving you an example of Mr. Mukesh started a business called a Reliance Limited. Now, the company has been formed, so the company will do the transaction, company will purchase the good, company will sell the goods, company will do the expenses, company will pay the rent, company will pay the salary, company will pay the audit fee. So company will incur the office expense, so company will incur thousands of expense each day. And in the case of Reliance, let's suppose the company will incur thousands of each day, and for the whole year there can be a 1 lakh different transaction. Now, how will the Reliance Limited will remember that on what date they have made a payment to somebody? Like if they have paid a salary to an employee, how will the Reliance Limited after the completion of the year will remember on what date they have paid a salary to a particular employee and what amount they have paid, at what rate they have purchased the good, and at what rate they have sold the goods, what is the annual rent the company is paying every year, etc. So how will the Reliance Limited will remember all this transaction? So the accounts has given the Reliance Limited a way. They have said that Reliance Limited will record each and every transaction as and when it take place in a book called General Proper. What is a book called? General Proper. So what is general? General, it is a book of original entry in which all transactions are recorded as and when it take place. So what is general? It is a book of the original entry, in which all the transactions are recorded as and when it take place. I will break up into a three part. First, it is a book of original entry. What we mean by the book of original entry? By the book of original entry, we mean as and when the transaction take place in the company, the first time whenever the company will record the transaction in that book, the first time where the company will record the transaction will be known as a general. So it is a book of original entry. So suppose if the Reliance has bought certain building, so the building entry will be recorded in the General Proper. Okay, it's a book of original entry in which all the transactions are recorded. What is a transaction and what is the event? See, you already understand the difference between transaction and event. We already discussed. The transaction is something which can be expressed in terms of money and where two or more accounts get involved. Right? So if I'm buying a building, either I'm paying a cash or I will pay by bank or I will pay in the future. So this is a transaction. So in a general, as and when the transaction took place in the company, like the company is paying the salary, company is paying the rent, company is generating an income. So all the transaction will be recorded in the general proper. And it will be recorded on as and when it take place. Second is the transactions are recorded, and third, as and when it take place. What is the meaning of as and when? See, the company has to maintain the general proper, and it has to be maintained on a date wise. So the transaction entered on 1st April will be recorded on the 1st April. The transaction which is entered on the 5th April will be recorded on the 5th April. So the company will maintain the general proper date wise. So it will record 1st April transaction first, then 2nd April, then 3rd April, then 4th April, then 5th April. It will not happen that company will record 1st April first, 2nd April, then 3rd April, then 7th April, then 10th April, and then again 6th April. So the company has to maintain the record date wise. It can never do a back date entry. So the company will record 1st April transaction, then 2nd April, then 3rd April, 4th April, then 10th April, 15th April, 30th April. Now after the over of, let's suppose, 15th April, the company cannot record the transaction for the 13th April on the date of 13th April. Yeah, the company can record the transaction in the future, but the company cannot do a back date entry, right? So what is a journal? It is a book of original entry in which all the transactions are recorded as and when it take place. And what is the help? What is the advantage of the journal? It helps the company to know when the transaction took place, at what amount the transaction took place, when the transaction is due, etc. So by looking at the general proper, you can find at what rate the company is paying the salary to the employee, what is the annual rent of the salary, annual rent of the premises, etc. Okay, now let's move to the next topic. See, before understanding how to pass the journal entry, I need to explain you the three very important concepts. Why? Because these three important concepts you have to know before proceeding to how to pass the journal entry. So write it down, this what is general, then we'll proceed to the three very important concepts. See, the three very important concepts which you need to know before making a journal entry is, the first is accrual concept. What is the accrual concept? As per the accrual concept, all the transactions are recorded as and when it take place and not when the settlement is done. See, I give you a simple example. Suppose a company called Reliance Limited and hire an employee at a salary of, let's suppose, rupees 6 lakh per annum, right? So the company have hired one employee at an annual salary of rupees 6 lakh per annum, and we are talking for the year, let's suppose, financial year 2018 and 19, that is 1st April 2018 to 31st March 2019. So in the case of Reliance Limited, since they had an employee, now the employee has worked in the company for the whole full year. Now the Reliance Limited is obliged to pay that employee 6 lakh rupees per annum. So for this whole year, the company has to pay 6 lakh rupees. Now I am giving a simple example. Suppose the company has paid only rupees 5 lakh to that employee. Now why 5 lakh? Maybe because the company want to pay 1 lakh maybe next month, maybe they want to pay 1 lakh over the next year, or maybe after 2 years, whatever the reason, or maybe the company may not have the cash. For whatever reason, the company has paid, instead of 6 lakh, the company has paid only 5 lakh. Now as a company is obliged to pay the employee 6 lakh. So as per accounts, our annual expenditure is rupees 6 lakh and not 5 lakh. Yes, the company has paid only 5 lakh, but the company is obliged to pay the balance 1 lakh rupees in the future. So what is the accrual concept? Accrual concept says that the transaction has to be recorded when it is due. So here the transaction is recorded when it is due. So here the employee has worked for the whole year, so the company has to pay the salary of that employee for the whole year. So the transaction is recorded as and when it take place, when it is due, and not when the settlement is done. See, the payment is the secondary part. The first part in the account is we have to know whether the expense has been or income has been incurred or not. So here the employee has worked for the full year, the company has to pay for the full year. Irrespective whether the payment has made or not, the company has to show in his books the expenditure of 6 lakh. So whenever any person will ask the Reliance Limited, what is your annual expenditure for the salary, the company has to say that the annual expenditure is 6 lakhs. Yes, they have paid only 5 lakh this year, but they will pay the balance 1 lakh rupees in the future. I give you another example. Suppose the Reliance Limited is incurring a telephone expenses and they are paying a monthly telephone expenses bill of rupees 1000 rupees per month. Now they have used the telephone expense for the whole year. Now let's suppose the company has paid only for 11 months. So they have paid 11,000 instead of 12,000. But when the company prepare the books of account, the company will have to show the expenditure as 12,000, not 11,000. Why? Because the company has incurred the expenditure of 12,000 on a due basis. Why? Because the company has used the telephone for 12 months, so they are obliged to pay the 12,000 rupees to a telephone department. Yes, they have paid only 11,000, so the balance 1,000 they will pay maybe in the future. Clear? The accrual concept is clear. So in account you have to follow the accrual concept. You cannot follow a cash accounting system. Cash accounting system is not allowed either in India or in US. Okay. The next concept, as you all know, I have already explained to you, it's business entity concept. What does the business entity concept say? Say the business, as per the business entity concept, the business and the owner are the two different entities. So I have given you an example. Let's suppose Mr. Mukesh has started a company called Reliance Limited and he has invested, let's suppose, rupees 2 lakh in a Reliance, right? Now Mr. Mukesh has invested rupees 2 lakh in a Reliance Limited. Now first of all you need to know that the Mr. Mukesh and Reliance Limited are the two different entity. So whenever you make an account for the Mr. Mukesh or Mr. Reliance, first you need to understand for which entity you are making an account. If you are making an account for Mr. Mukesh, then you have to think from the angle of Mr. Mukesh. So from the angle of Mr. Mukesh, the 2 lakh cash is going out. The 2 lakh cash, because he have invested in his business. So from the angle of Mukesh, the 2 lakh cash is going out. Now if you are making an account for the Reliance Limited, so you have to think from the point of view of Reliance. From the angle of Reliance, they are getting a cash of rupees 2 lakh. They are getting a cash of rupees 2 lakh from its owner. So in this case we will record assuming that they are getting the cash. So you get the point. What does the business entity concept say? The business and the owner are the two different entities. Never mix and match. You cannot assume that they are the one different entity. No. Even if the Reliance Limited is 100% owned by Mr. Mukesh, then also you have to record the entry as if they are two different entity. Okay. What about third concept? Third concept is called a cost concept. What is a cost concept? It is a very important concept. I give you a simple example. Suppose this pen has an MRP of 20 and I went to the shopkeeper and say that I want to purchase a pen. Now instead of 20 he has given me a pen at 18 rupees only. So the MRP of pen is 20, but he has given me the pen at 18 rupees only. Irrespective whether I paid 18 rupees or not, that's a secondary part. The transaction between me and the shopkeeper has been entered at what price? They have been entered at the price of 18. So in the accounts, I will record this transaction at what price? I will record at 18 rupees. The market price of the product is totally irrelevant for me. So I give you another example. Suppose I have brought one BMW car whose market price is 50 lakh rupees, but because I know that the person personally, I have brought this car at 30 lakh only. Now I have brought a car of 50 lakh for 30 lakh. So at what price I will record in the accounts? In accounts, I have to record that I have brought this car for 30 lakh. I cannot record this car at 50 lakh. Why? Because the accounting concept says you have to record each and every entry for the amount you are paid for or you are obliged to pay. So here my concept go, what is cost concept? The cost concept is you have to do the each and every transaction on a cost basis. So first you have to identify at what price the transaction has took place. Market price is totally irrelevant for the for the business. Clear? Okay, so these three are the very important concept: accrual concept, business entity concept sorry, and the cost concept. There are many other concepts also, like a going concern assumptions, like the consistency assumptions, like the revenue principle. There are many other concepts which I have already explained to you. But yes, to pass the journal entry, you need to know these very three important concepts. Now let's move to the next topic. Then we will explain you how to pass the journal entry. Write it down this. Okay, so I've already explained to you the three important concepts. What are the three important concepts you need to know? The first is the cost concept, then you are an accrual concept, and third is the business entity concept. Now we will proceed to how to pass the journal entry. See, in order to pass the journal entry, there are two different ways which the account prescribe. The first one is a traditional method, and another one is modern method. So there are two different ways in which we can pass the journal entry. You can pass the entries using the traditional method formula, or you can pass the entry using the modern method formula. Both the method, either you use a traditional method or a modern method, will give you a same answer. Now I will explain you both the traditional method as well as modern method, but first I will discuss the modern method. Why? Because the modern method is comparatively simple to understand, comparatively easy to understand for the student. So let's start with the modern method first, but mind it, you can follow either modern method or traditional method, no problem in this. The both will give you the same general entry answer. First we will start with the modern method and then we will proceed to the traditional method. So let's start the modern method now. See, as per the modern method, all the accounts of a company or a business entity are grouped under the 5 different heads. What are the heads? See, the first head is asset. Then it is a liability, expense, income, and capital. So as per the modern method, all the accounts which the business open, like in the case of Reliance Limited or in any other company, the Reliance Limited pay the rent, they pay the salary, they generate the income, they purchase the good, they sell the good, they buy a building, they buy a land, they buy a machinery, they sell the good. So whatever they do the transaction, so all the entries or all the transactions are grouped under the 5 different heads. There cannot be a 6th head, so it has to be grouped under 5 different heads: asset, liability, expense, income, and capital. I give you an example of an asset like land. Second, let's suppose building, vehicle, cash, bank balance. So all these are assets. I will explain you. Fixed debtor, which I will explain you in detail. Liability, let's suppose bank loan, salary outstanding, creditors, which I will explain you. What is an example of expense? Like rent, expense, the company incurred rent, salary expense, the company purchased the goods, purchase, company incurred the office expense. There are hundreds of expense, you can write it: audit expense, entertainment expense, traveling expense, postage expense. All the expenses are clubbed under this heading. Then there is a income also, like there is a income of sales income whenever the company sells a product. Second, whenever company commission received. What is commission received? Whenever the company give any consultancy, so the company will get the commission income. Suppose the company has also given a building for rent, so they will get the rent also, rent received. Fourth, like interest income. So how come a company can generate an income? Suppose the company has given a loan to somebody. Now, by giving a loan, the other person will give a company a interest. So the company will generate interest income. And if the company is paying, then it will be called interest expense. Okay. And what is this capital, sir? See, the capital is a very important account. It is the owner account. Owner related account. Capital means whenever a company or a business or an entity deals with its owner, so that transaction we will include that in the capital account, which I will explain you in detail. So all the accounts are grouped under the 5 different headings: asset, liability, expense, income, and a capital. Now I will give you an example of the asset, like land, building, vehicle. What is an asset? See, what is an asset? Asset is something which I own, or which I have a right to receive. So land, if I buy a land, so I am a owner of that land, so it is my it is my asset. If I buy a building, so it is my asset. Yeah, whether I have paid or not, that is not a question. Had I buy the building? Yes. If I bought the building and the building has been transferred in my name, so I become the owner of the building, so it is my asset. Anything which is my property and over which I have a control, it become my asset. Or anything which I have a right to receive the amount, it is also an asset. So I have an asset of vehicle. So if I purchase a vehicle, it is my asset. If I have a cash in my let's suppose the company is having a cash of rupees 5 lakh rupees, it is also an asset. Why cash is an asset? Because cash can be used to purchase anything, so it is a asset for the company. Now a bank balance, like a cash is an asset, so bank balance is also an asset. Why? Because cash, when it is kept at the office, it is a cash, and if the cash has been deposited in the bank, it is a bank balance. Ultimately the company has a right to receive that amount from the bank, so the company has a let's suppose an account with an HDFC bank, and they have deposited 10 lakh in the HDFC bank. So the company has a right to receive the 10 lakh rupees from the HDFC bank. Okay, and the last part is debtor, which I will explain you in detail. I will give you a simple example of what is debtor. Whenever the company sell the goods in which the company deal. Suppose I am into a manufacturing of this pen. Now this pen is my good, so whatever goes inside the pen is my good. So the ink is going into the pen, the plastic is going into pen, that is my good, and the pen itself is my good. Now whenever I sell the pen, either I will receive the cash or I will not receive. If I receive the cash, it will go into the cash account, so my cash account will increase. If I receive by check, my bank account will increase. If I sell the product and the other party had not paid right now, they are saying that they will pay me, let's suppose, after 2 months. Now suppose if I sell to Mr. Ram a stock worth rupees 10,000 rupees to him. Now he has paid only 7,000 rupees till now. Out of 10,000, I sold the product of 10,000 to him, and he has paid only 7,000 to me. So it means the balance 3,000 I have a right to receive from him. So 3,000 will be my asset, and it will be called as a debtor. So what are the debtor? When I sold the good, when I sell the good, and if I don't receive the money, then if the money will be receivable in the future, and that amount will be called a debtor. Okay, so you understand what is the meaning of the asset. Now let's move to the liability part. What is a liability? Liability is something which I have to pay to somebody. Suppose if I have taken a loan of 5 lakh rupees from the bank, now ultimately I have to pay that 5 lakh rupees back to the bank, right? So that's my liability. So if I have to pay to anybody, if I am a company and if I have to pay to anybody, it will become my liability. I give you a simple example. Suppose the Reliance Limited had brought a building worth rupees 10 lakh. Out of 10 lakh, the Reliance Limited have paid only 7 lakh rupees, or only 6 lakh rupees they have paid. Why? Because they want to pay the balance 4 lakh maybe after 3 months. So if I am told to prepare the balance sheet right now, if I am told to prepare the accounts right now, the Reliance Limited had paid the 6 lakh rupees, but the balance 4 rupees the Reliance Limited have to pay ultimately in the future, and that will become a liability. So what is liability? Liability is something which we have to pay to somebody in the future. Okay, so the bank loan, if I take a loan from the bank, it is my liability. Salary outstanding, if any employee works for me, let's suppose I give you an example. If I hire an employee for 6 lakh rupees and I have paid only 5 lakh to him, so balance 1 lakh rupees I have to pay him in the future. So that 1 lakh rupees is my liability. Third is a creditor. What is a creditor? It's the exact opposite of the of the debtor. So what is creditor? See, by the creditor we mean if I purchase a good, I deal in the manufacture of the pen. So if I buy the ink for my pen, now if let's suppose I'm manufacturing a pen and if I buy a ink for my pen, now I have an option. Either I will pay to the supplier of the ink immediately, or I will pay the amount in the future. Suppose I have brought an ink of rupees 5 lakh rupees from the business who is based on Delhi, and I have paid out of 5 lakh rupees only 3 lakh rupees. I have paid only 3 lakh rupees. So 3 lakh rupees my cash is going out, and balance 2 lakh rupees I have to pay in the future. So whenever I am purchasing a goods in which I am dealing, so I am dealing in the pen, so if I need to pay the amount related to my product, then I hadn't paid, then it will go under the heading creditor. Clear? So the definition of asset is clear. Asset is something in which I own, which I have right to receive, in the future. And what is liability? Which the liability is something which I am obliged to pay. So if you're doing an accounting for a company, what is the company obliged to pay? The company obliged to pay the bank loan. If it has taken a bank loan, the company obliged to pay a salary. If the company is using the premises and they hadn't paid a rent, the company obliged to pay the rent. And what is the creditor? Whenever the company buys the goods and the company hadn't paid the same, so that amount will go under the heading creditor. Now let's move to the next heading, expense part. What the expense mean? Expense mean whatever the company incur as the expense will go under the expense part. So if the company is into the building and they have paid a rent, so it will go under the heading rent account. If they have paid a salary to the employee, it will go under the heading salary. If they have paid certain traveling expense, it will go under the head of the traveling expense. So the company will, each and every company will incur thousands of expense. Now we will club that expense into the similar head. So if the company is paying, let's suppose, a salary of 100 employees, so all will go under the heading salary. If the company is paying a rent of, let's suppose, 50 buildings, now the company, it will go under the head the rent account. If the company is incurring, let's suppose they are buying the pen, paper, other stationery item, so they will club all these expense under the heading stationery expenses. Now if the company purchase the goods, see, if I am dealing in the manufacture of the pen and if I buy a ink, that is also my expense because I am buying the ink to manufacture the pen, so that will also go under the heading expense. And if I am incurring any office expenses, it will go under this. if I have taken a loan, I am a business, and if I am taken a loan, I have to pay a interest also, so that is also my expense. So all the expenses will be covered under the heading expenses. So what is income? Income is something which the company generate. So what the company generate? Whenever company sells the product, it will generate the income. Let's suppose this pen is of rupees 20 and I have sold 1000 pen. So I am obliged to receive 20,000 rupees from the customer. They must have paid only 15,000 to me, and 5,000 they will pay in the future. But what is my gross income? What is my income? My income is 20,000. I have sold the pen for 20,000 to the customer, so it will go under the income. What is commission received? If the company provide any consultancy services, it will go under the heading consultancy account. If the company has given a building on rent, the company is the owner of the building. Suppose the Reliance is the owner of the building, and they have given a one particular portion of rent to some other company. So for Reliance Limited, they will get an income from that company. So it will be the rental income, and the company can also got the interest income. What is the interest income? See, the interest income means whenever company give a loan to somebody, they will that person will give an interest to the company. So for the company, it is an income. So it is very important, you need to understand what is the difference between an expense and the income, and always remember, always think from the point of view of the entity for which you are making an account. Clear? Okay. And what is capital account? See, the capital account is very important account. It is related to the owner. So if the business, as per the business entity concept, you already know that business and the owner are the two different entity. Yes, they are two different entity. Now, when they are two different entity, whenever you need to prepare an account, you have to think from the entity for which you are preparing an account. So if you are preparing an account, let's suppose for the Reliance Limited, you have to think from the Reliance Limited angle. But for the owner related transaction, if the Reliance Limited do any transaction with a Mr. Mukesh Ambani, then that transaction will come under the heading capital. So if the business do any transaction with its owner, then it will go under the capital heading. So why there was separate heading for the capital? Because he is the owner of the business. So any entry with the owner, so any profit with the business earn over a year will ultimately belong to the owner. Because why the business will make money? Why the Reliance Limited will make a profit? Ultimately that profit will be transferred to the owner. So for the owner, we prepare only one account, which is known as the capital account. There is one other account which is known as a drawing account, but which I will not discuss right now. When the appropriate time will come, then I will discuss what is drawing account. Right now, you remember, for the business, for the owner, we prepare only a capital account. So in a business, you need to have only 5 different heading. All the account with the business operate, be it a rental, be it stationery, be it traveling, be it advertisement expenses. All the expenses will be grouped under this 5 heading only. Either it will be an asset, or it will be liability. It can be either expense, or it can be income, or it can be a capital. If the company has brought a building of rupees 5 lakh and they have paid only 3 lakh, so the 3 lakh rupees my cash is going out, and the balance 2 lakh rupees the company has to pay in the future. It will go under the heading liability, and the company has become the owner of that building, so the 5 lakh rupees will go under the heading asset. Okay, so write it down, these 5 accounts. See, now I have already explained to you that all the accounts will be clubbed either under the heading of asset or liability or expense or income or capital. Now I will teach you the most important part of this whole account. What is the most important part? I am teaching you the modern method rules. See, the rules of the modern method are, see, first you need to understand, first just write down which I am writing. Asset, expense, liability or income or capital. Debit, credit. What is debit or credit? I will explain you in detail what is debit and what is credit. Now, whenever asset and expense, the rules of accounting is whenever asset and expense increase, we will debit the account. The rules for the asset and the expense are the same. So whenever asset increase or expense increase, we will debit that account, and whenever asset decrease or expense decrease, we will credit that account. Okay, now what is the rule for liability? It is exactly opposite to this. Whenever liability increase or decrease or an income decrease, whenever liability increase or income increase or capital account balance increase, it will be credited, and whenever the liability, income or a capital decrease, it will be debited. Okay, I repeat, whenever asset or an expense increase, it will be debited, and whenever asset or expense decrease, it will be credited, and whenever liability, income or a capital increase, it will be credited, or whenever the liability, income or a capital decrease, it will be debited. I will write it down here also. Asset, expense increase, debit, decrease, credit. Okay, and liability or income or capital increase, credit, decrease, debit. So asset and expense have the same the rule, and the liability, income and the capital will have a separate rule. Okay, now if the company incurred a loss, the loss will go under the heading expense because it is a nature of loss. Whenever the company will incur a loss, it will go under the heading expense. If the company generate a profit, it will go the income. If the company generate a sales, it will go under the heading income. Now what is debit, what is credit? I need to explain you. First you write it down, this rule. This is a very, very important rule. Okay, so you have written which account will be debited and when it will be debited. If an asset or expense increase, it will be debited. If an asset or expense decrease, it will be credited. And the liability, income and capital is exact opposite of asset and expense account. So when liability, income or capital increase, it will be credited, and when liability, income or capital decrease, it will be debited. Now what is this debit and what is this credit? See, I'll give you a brief summary. In accounts, whenever you prepare an account, you prepare an account like this. Suppose you are preparing an account of rent account. The company has incurred a rent, so rent account will look like this: date, particular amount, date, particular and amount, right? And the left side is called debit and the right side is called the credit. So in account, whenever we say the left side, it is called debit and the right side will be called credit. Now why the left side is called debit and why the right side will got credit, I will explain you in detail about this topic, but now you need to understand what is debit and credit. Like in mathematics, you have plus, minus, subtraction, addition, etc. In accounts, there are only two things: either the account will get debited or the account will get credited. There is no third way. So in whole accounts, all the accounts are clubbed, either the account will get debited or will get credited. It cannot happen that that account can is not debited and is not credited also. If the company has created an account, it has to either debit the account or it will either credit the account. Now what are the rules? I have already explained to you. Now I will explain you how the journal entry will look, and then we will move to the practical part. I will give you a practical example that how the journal entry will do by following this simple rule. You have understood these 5 different headings. This is very important heading: asset, liability, expense, income, capital. There should be no doubt that all the account, whatever coming into your mind, will be grouped under this 5 heading only. Now I have already explained to you the rules of the modern method. The rules of modern methods are asset and expense have the same heading, same rule, and liability, income or capital has the same rule. See, if you need to remember this, I have one more option. Asset and expense, you can write AE, you can convert it into American Express Bank, AE, and this is, you can say LIC, Life Insurance Corporation, right? LIC, liability, income and capital, and income include the profit part, and if the company incurred a loss, it will be covered under the expense. So asset and expense have the same rule, and liability, income and capital will have the same rule. Whenever I will do the entry, I will refer this chart. And you will be surprised that each and every accounting entry will be cakewalk for you. Why? Because this is a very simple rule, and if you have understood the foundation of this rule, then all the accounting entry will be a cakewalk for you. Okay, now I will explain you how the journal book will look, and then we'll move to the practical application of this rule. Okay, so how the journal will look? I give you a simple example. It will look like this. In the books of, let's suppose we are doing an accounting for Reliance Limited, it will look like this. Reliance Limited, the first part is date, then the next part is particular, then the next part is LF. I will explain you. LF means the ledger folio. Next part is debit, and the next part is credit. Okay, for the journal entry, whenever you make a journal entry, the journal books will look like this. The first part is a date part, then the next part is a particular, then LF, debit and credit. What is LF? LF means the ledger folio. Will explain you. And let's suppose we are doing an entry on 5th April 2018, and company has purchased a furniture. So company has done the entry. Don't worry, I will teach you how to do the entry. Furniture account debit to cash account. Let's suppose company has purchased a furniture of rupees 5,000. So company will do the entry like this: being furniture purchased for cash. Okay, now how will the company will do the entry? See, I will explain you about this by doing the practical question. Right now I am explaining you how the general book will look. See, this is a date part. In the date part you will write the date column. That's pretty simple. In the particular part you will write the entry, and always remember, first entry will be always be debit. So first the debit will come and then the credit will come. Debit, credit. First will come the debit part and then will come the credit part. And when you deal with the debit part, the debit entry will come like this, like if you are purchasing a furniture. So the debit furniture account, the account is an A/C is an abbreviation of the account, and it will be prefixed, it will be suffixed by DR. DR means debit. Now why it is DR? Because there is no R in the debit. See, the debit word is derived from certain French word debitrum. So there the R word is there. So from there we are using DR. So for the debit you are using a DR. So the accounts will get debit, furniture account, certain amount of space has to be there, and after a space, say maybe a 2 or 3 letter space, you can write debit, or you can write over the end debit. Then first you have to write the debit part, and then you have to write the credit part. And how will credit part will you have write? See, the debit part will start over there, and credit part will start with a slightly space over here. You need to have a 1 or 2 letter space, and the credit part will always start with the word to. TO2. The credit the part will always start with the word TO2, and then the account for which you are preparing. It can be an asset, expense, income, capital, etc. To cash account. Account, as you all know, it's an abbreviation for the is an abbreviation for the account A/C. Okay, so the credit part will always start with a TO2, and it will start with a slightly space between this and this. So there has to be certain space have to left. Why they were stayed left? So has to have an understanding. When you look at the entry, you need to you clearly understood, okay, this is a credit part, and the 2, whenever it starts with the 2, it is a credit part. Now since it has started with the word 2, there is no need to write CR over here. No need to write credit for the entry. Yes, DR is a short form for the debit, and the credit, the short form is CR, but there is no need to write a CR for the credit item. Why? Because it is already a hint that whenever it starts with the 2, it will be called as it is a credit item only. Okay, so in the debit column we will write the debit amount, and in the credit, if the entry is getting credited, so we will write the credit amount. Now what is this? This is a narration part. It will just briefly explain you that what is this entry for. So it will say, being furniture purchased for cash. The company has purchased the furniture by paying the cash. So it will just explain to the auditor or to any other person who is looking into the company accounts that what is this entry for. So if the company has paid a salary, the salary account debit to cash, so it will say being salary paid for the month of June. So it will explain you, okay, the company has paid a salary for the June. So by looking at the narration, we can have an idea what is this entry for. Now I will explain. And what is this LF? LF, as you all know, it is a ledger folio. Ledger folio, when I will start the chapter, the ledger part, then I will explain you why this is LF is used. It is just used for a reference purpose. You prepare an index, right? Whenever you make a copy or a notebook, you prepare the first page is reserved for the index. So this is just an index for this entry. Where the furniture entry is going, under which page of the ledger it is going, it is an index part. But you not need to understand right now what is LF. When we will do the ledger folio or ledger chapter, then I will explain you about the importance of this part. But yes, it has to be there on each and every journal. This 2 line has to be there, debit, credit has to be there, and this is a narration part. Okay, now I will do the practical questions of the journal entry, so has to have an understanding that what is the journal entry and how the journal entry is passed. Let's start with the practical example. Let's do the question number 1 now. Hello friends, for more such videos on accounts, you can visit my website accountsfunda.com, wherein each topic has been explained in very clear and detailed manner, and also you can call and WhatsApp at my number 9549168168 for any accounting related query. And please don't forget to like, subscribe and share my YouTube channel Accounts Funda. Thank you.